Okay, hi there and welcome to another in our economic growth and development profile videos. In this video we're going to take a look at Morocco, which is a middle income emerging country which in 2018 was ranked as the 5th largest economy in Africa. Now, some economists believe that Morocco is well placed to make a transition to upper middle income status as they successfully diversify their economy, but can they achieve the rates of growth necessary to sustain strong per capita income growth? Morocco is the first North African country that we've chosen for a growth and development profile. Crucially, their ties with the European Union in general and with Spain and France in particular are strong. So this is a good country to use when building context. For example, how might an external shock inside the EU, such as a possible recession, how might that impact on Morocco in terms of their main macroeconomic objectives? As always, we take a look at some of the key development indicators for Morocco. Their per capita income, GNI per capita, PPP adjusted, just under $7,500. They're ranked 121st in HGI, although improving. Very strong inflows of remittances. There is a large Moroccan diaspora who live and work in other countries, including in the European Union, and they send back substantial remittance inflows. They're relatively less dependent on overseas aid, and they've made substantial progress in reducing extreme poverty. The working poverty level, percentage of the total people in work less than $3.20 a day, is now less than 6%. So Morocco has made good progress in building a resilient economy. Extreme poverty is down, urbanization is high, I think it's over 60%, and the business environment has improved. But as we'll see, there are other big weaknesses that they have to address. Morocco is a good example of a country whose PPP adjusted GNI per capita is much higher than their national income per head of population at market exchange rates. So just under $3,500 at market exchange rates, just under $7,400 with a PPP adjustment. The PPP figure takes account of differences in the living costs between countries for a basket of goods and services. Other aspects, again, as with many developing countries we've looked at, a relatively low female participation rate in the labour market. The employment rate is dragged down by that factor. Only a third of females in Morocco have some form of secondary education. And again, I've highlighted their youth unemployment, 27%, according to the HGI figures, somewhere between 20 and 28% youth unemployment is a major barrier to Morocco. Some interesting research here from Charlie Robertson at Renaissance Capital. Our research shows that adult literacy topped in Morocco, went above 70% in 2015, which according to their analysis, according to their research, is the prerequisite for a country to sustain manufacturing above a fifth of GDP. So they're making a link there, a causal link between adult literacy and the ability to build capacity and capability in manufacturing. Morocco is emerging as a manufacturing centre within the African economy. We'll come back to that in a second. Overall, in recent years, if you look at the macro data, Morocco has been pretty good. Actually, it's been characterised by macroeconomic stability, including low levels of inflation, the levels of inflation that we will be familiar with in the context of the UK. Yes, they have a twin fiscal and external deficit, but both look under control and are manageable given the continued inflows of foreign direct investment. Interestingly here, investment is quite high as a share of GDP, particularly in the context of African countries. There's a high level of investment spending and also a high level of domestic savings. Morocco has attracted quite a bit of inward investment. Renault, Peugeot, Airbus, Siemens and others are investing in Morocco, keeping their growth rate at around 3% per year. Their population grows by about 1.5% a year, so per capita income is rising by about the same figure. But a key barrier for Morocco, a key growth and development constraint is very high rates of youth unemployment. If you've been following the economics and the politics of North Africa, you'll know that very high rates of youth unemployment, particularly in countries like Morocco, in Libya, in Algeria, and also, of course, in southern European countries, Greece, Italy and Spain. They have become one of the biggest social, economic, humanitarian issues of the age. Youth unemployment in Morocco has been rising despite growth from 15% in 2003 to over 20% in the latest figures. A large percentage of young people are economically and politically excluded. 45% of the population is aged 25 or below. They have a young median age. The demographics are favourable, but many in the young population are not represented in politics. Sizable, perhaps a majority, cannot make a regular living. And this is leading to big social tensions and pressures for political reform. James Hall has focused on this big issue of Morocco in a recent tweet. 1 out of 4 Moroccans want to leave their country. In particular, graduate unemployment is very high. And in fact, Morocco is a good example of a country with a net outward migration of labour. Other aspects, the dirham we're going to come to in a second, that Morocco is gradually moving from a semi-fixed exchange rate to a more flexible system. Morocco scores pretty well actually in terms of competitiveness and also in terms of ease of doing business. I think in 2019 Morocco was the 3rd best place in Africa in the World Bank's doing business ranking. I think they came just behind Mauritius and Rwanda. And Chinese investors in particular are increasingly looking to Morocco, in part to take advantage of Morocco's valuable and extensive free trade agreements with Europe and with the United States. In fact, Morocco does have a sizable number of free trade agreements. It has one with the United States. It has ones with Egypt, Tunisia, Turkey, UAE, and it has a free trade agreement with the European Union on farm products. They're trying to widen that into a more extensive free trade agreement. Of course, Morocco is not part of the European Union and is not a potential member. The export pattern for Morocco is quite interesting. Go back 20 years, farming would have been the dominant sector. Now it's increasingly manufacturing products. Notice the relatively high share of manufacturing exports of vehicles is now the biggest single export sector. That's an important part of the Moroccan growth story in recent years. They do have extensive reserves of potash. So I think 75% of all the phosphate reserves globally are in Morocco. Massively important, of course, in terms of fertilizers and things for the European farming sector. Farm sector is the biggest employer in the country, ahead of tourism overall. So Morocco has an aspect of an element of primary dependency in the sense that the country is still heavily dependent on phosphorus and things like tomatoes. And the country is vulnerable to the impact of extreme weather, including climate change-induced weather patterns. Water scarcity is clearly a huge issue for the country. Interestingly as well, Morocco has a very high dependency on trade with the European Union. As this chart from the Observatory of Complexity shows, something like 65-70% plus of the exports of goods go to European Union countries. Over 40% goes just to France and Spain. So this is an interesting example of gravity theory, that you trade most with countries in nearest proximity. Well, Spain is in clear near proximity to Morocco. It does make Morocco exposed to weaker growth inside the EU. So if there's a European slowdown, perhaps even a recession, that would lead to fewer exports, certainly would lead to less tourism. Moroccans living and working overseas would send less remittances back home. There might also be a dip in foreign direct investment. Interestingly, Morocco does relatively little trade with other Middle Eastern and North African countries. So there's fairly low intra-regional trade. A lot of this is political, big, deeply embedded tensions with Algeria, but also some protectionist battles over the years. Now, the key for Morocco, the key is to diversify their economy. So many of the developing countries you will study and talk about in your exams, you'll be talking about the importance of diversification, moving away from heavy dependence on farm exports, for example. 4 key sectors: automotives, aeronautics, electronics, and also critically renewable energy. So Morocco, in terms of cars, overtook South Africa last year as Africa's biggest car maker. Nearly 500,000 cars were made in Morocco last year. The automotive sector, cars and vans and trucks, employs over 110,000 people. One factor is that minimum wages are lower. Minimum wage in Morocco is half that of Poland, for example, attractive to foreign direct investment. Here's James Hall again, the Reuters correspondent, picking up the huge car plant there, economies of scale in action. The Peugeot plant in Kenitra, making 100,000 engines, 200,000 cars by next year. So clearly there are some substantial economies of scale in car making. Morocco is also the world's 4th biggest exporter of tomatoes, earning 7% of the world's tomato consumption comes from Morocco. Clearly a key export sector. I think the economic point there is it's not just about growing the tomatoes, it's also about processing them and getting the higher value added as you go through the supply chain. That's key for countries that are heavily reliant on primary products. And crucially, I think the other reason I wanted to really focus on Morocco with you today is this question of renewable energy. A great example to use, the Noor plant in Morocco. Pictured here is the world's biggest concentrated solar panel or solar power farm. It is the size of 3,500 football pitches. It powers more than 1 million households. Clearly Morocco is taking advantage of natural comparative advantage. I think they get something like 3,000 hours plus of sunshine every year. So Morocco is a great example of a country to add to your notes, of a country that is trying to become less energy dependent on imports. They want to develop an energy mix, 40% renewable by 2020, 50% by 2030. So solar power is crucial. So too, they've got the 2nd largest wind farm in Africa, after South Africa, utilising the mountains and the coastal areas. Tourism, obviously, massively important. Big foreign exchange earner, bringing the dollars in, bringing the euros in, employing a substantial part of the labour force. Again, if you're writing about tourism, use Morocco as an example. A classic exam question: examine whether tourism can be a long-term driver of development for countries such as Morocco. And the other reason for picking Morocco out as a good contextual example for you is the importance of infrastructure investment. Here's another exam-style question. Morocco actually has some of the most advanced transport infrastructure in the whole of the African continent. Al Barak is a 200-mile high-speed rail service between Casablanca and Tangier. It's the only high-speed rail service in Africa at the moment. And Morocco has the second biggest motorway network after South Africa. It's developing new port infrastructure. I think it has now in excess of 30 separate ports. Tangier is the biggest container port in Africa. Link that to your understanding of globalization. So Morocco in many ways has an infrastructure that other African countries aspire to. However, critics argue that despite spending billions of dollars on big infrastructure projects, bullet trains and new cities and ports, many basic infrastructure and development needs around the country, particularly in rural areas, are still not being met. Just finish with a word on the exchange rate. So Morocco is an example of a country which until recently had a fairly fixed exchange rate. They take the Moroccan dirham is pegged to a currency basket of the euro, 60% weighting, and the US dollar, 40%. And you can see here that typically €1 buys about 10 Moroccan dirham and $1 buys about just under 10, 9.75. Now what Morocco has done recently is it's just widened the extent to which their currency can move against the euro and against the dollar. So they're undertaking a process, if you like, a transition to liberalise their exchange rates so that it has more freedom to float and move, for example, in the event of a big external shock, such as a recession in the European Union or a big global economic shock. So Morocco is a good example of a country which is moving from a fixed exchange rate effectively towards a more flexible exchange rate system. Again, think about the exam questions here. Examine the costs and benefits of moving towards a more floating, if you like, managed floating exchange rate system in the years ahead. Loads of ways that you can use Morocco as a possible context and application. Don't forget, to get the highest marks in exams this summer, you need to have application, you need to have context. So the role of infrastructure, both on the demand and the supply side, the economic costs and consequences of very high youth unemployment and what can be done to address that, the economic issues of moving from a semi-fixed exchange rate perhaps to a managed floating system, the significance of tourism as a growth and development strategy for countries such as Morocco, and crucially, the economics of intra-regional trade. Morocco has high dependency on trade with the EU. What are some of the trade creation and trade diversion effects from having free trade agreements? So loads of reasons for studying this fascinating middle-income emerging country called Morocco.